Again, super excited about this discussion, and of course, Navneet is a very well recognized industry figure. He doesn't need any introduction, but people who have not interacted very closely with him, let me tell you, he has very many facets. First of all, he has a brilliant accounting and finance mind. He has steadfastly worked not only in his roles wherever he is led, but also in creating the ecosystem, led the initiative for the CFA Society, which is shaped up so beautifully. He's a thinker and philosopher. Often I've heard him quote stuff from spiritual texts. He can speak about Vedanta as eloquently as he can talk about AI. Here, of course, he's wearing two hats. One as CEO of a very trusted mutual fund house in the country, and of course the chairman of AMFI, which is been a huge driver in creating the right environment, and of course he's taking initiatives at AMFI to a different level altogether, and it's really a delight to talk to you, Navneet.
Entirely my pleasure, Mahalakshmi.
Thank you so much. And another distinction is that Navneet has been on the investment side and one of the few people who has moved from investment side to become a CEO. So I'm going to start with that, Navneet. As we've discussed in the first session and also in the address that Mr. Amarjit Singh made, there is often a conflict between what is right for the investor and what is desirable or what business wishes to accomplish. And as a CIO or as a fund manager, you're often more cognizant of the risks that the market poses. As a business, you are more focused on what you need to achieve in the next quarter and the next year. In your roles as CIO earlier and CEO now, tell us some instances of how this push and pull has played out, and how real is this problem and how are you solving it now?
So I strongly believe, I think a few years back, somebody in Moneycontrol did an article with me, and they asked the same question, and I said there cannot be a trade-off between the interest of the unit holders and the interest of shareholders. And if there is a trade-off between them, then in the long run, both won't be a winner. You cannot build a business where you don't put customer at the center of everything that you do. Our business, our dharma is fiduciary responsibility. And if you are not following that dharma, then shareholders cannot benefit in the long run. And again, I repeat, in the long run. You can always, maybe for a quarter or for a year, you can take a shortcut where you think that this is good for business, may or may not be good for unit holders, but that may not create the sustained value for shareholders. And I've always strongly believed that there is no trade-off. I think it depends on the time horizon. If you extend that, and shareholders are like perpetual investor, right? I mean, there is no end date to that. If you think about that, then how can there be a trade-off?
Okay, I'm glad you say that. Now, obviously, because this
I use that word dharma, and you talked about the spiritual. So there's no English translation or translation in any language of the word dharma. Dharma is very unique to us. And the dharma for us, dharma is like pani ka swabhav hai behna. There's a dharma of water, there's a dharma of air, there's a dharma of, let's say, whatever. The dharma of us is fiduciary responsibility. And there is something called dharmen rakshati rakshita. If you do the raksha of dharma will do raksha of you. And I think if our dharma is fiduciary responsibility to our unit holders, they will ensure that the business does well in the long run, yeah.
But as a CEO, you are bound by karma, right? I mean, dharma bhi hai, But karma bhi to important hai na? Karma is not in conflict with dharma here.
They cannot be disconnected. They cannot be disconnect. And in the history you go back, everything, whether it's a Mahabharata, Ramayana, everything, it's all about whenever you have a disconnect between what your dharma is and what your karma is. If you have a disconnect, then the outcome won't be good.
Okay. Now, it's interesting you talked about fiduciary responsibility because we want to spend a lot of time talking about that. How seriously do you think now there are a lot of, nearly 50 players in the industry, how seriously do you think this fiduciary responsibility is really taken by the industry? What is your sense?
So I was deeply impressed by Mr. Amarjit Singh's presentation, and he rightly talked about the many things that SEBI and AMFI together have done over the years. I think this is an industry which is like, I would say, one of the most regulated in the world. We are highly governed. The structure of the responsibility of AMC board, the responsibility of trustee board. In fact, the trustee board structure is not there the way it is in India, in many of the countries, and then the role of all the committees, the audits. We are hugely publicly scrutinized by people like you simply because you have so much of data and information in the public domain about us. You don't get that much of data and information about any other industry, and that's why you don't see a deeper analysis the way you see about us relatively anywhere else. But at the same time, you mentioned that over a period of time, it's not only the job of the regulator, or regulation alone cannot lead to the outcome that they would like to see. And that's where the role of the culture, that's where the role of having a sense of purpose, that's where the role of all stakeholders in the markets who have to strongly believe in, I won't quote too much from, let's say, Indian scriptures, but let's say Adam Smith, he says, trust is the oxygen of capitalism. Trust is the oxygen of capitalism. If you want growth and if you want like markets to do well, and if you don't put trust as the foundation of that, markets will collapse. It cannot sustain. And that's where I think the role of all of us, there's a collective responsibility on all of us. By the way, in our industry, if I remember correctly, from 2007 to 2025, the number of players hovered around 45. They remained same. I think you will meet a lot of people who have set up AMC, you will meet a lot of people where it got merged or maybe got closed, but the number of asset managers did not change. The industry grew from few lakh crores to 70 lakh crores. Now you are seeing a substantial increase. We would have crossed 50, and next year you will see probably 60 players. And I think, and several of them don't come from an institutional background. Several of them are, or most of them are professionals. And I just hope that they keep one thing in mind, that this is the most noble job in the world. This is the most noble profession in the world when you're dealing with somebody else's money. And over a period of time, it has to go from, let's say, one individual who's starting with few people. How do you build that institution, which is very important? Because it's not only about failure of one player, the impact it will have on the trust of millions of investors who are putting money in the industry.
Fair enough. And you have been instrumental in creating this, ethics committee. And I do remember when you were just taking over as AMFI chairman, you were telling me that, this is what you want your legacy to be, in a sense. So you tell me more about the ethics committee. What do you really hope to achieve? Because my question is, at an industry level, you can put practices, you can put standards, but in the end, if you don't reprimand the bad players, if you don't take action, if you're not able to enforce, nothing really changes. It's just on paper. So how do you steer this really?
So first of all, this is not an enforcement committee. The ethics committee, consisting of stalwarts like Mr. Mahalingam, who was the whole-time member of SEBI, Mrs. Shamala Gopinath, who was Deputy Governor of Reserve Bank, and Mr. Vishwanathan, a lawyer. The idea was that, and the discussion was that we are highly regulated, we are highly audited, we are like publicly scrutinized so much. We have all the regulation, then code of conduct, we have so many best practices
in fact, many
on
of your
almost everything.
competitors feel that,
then why do you need that?
Correct.
But this is where also, I think as Mr. Amarjit Singh, going back to his presentation, he said that we want industry to be more and more, doing the self-regulation. And it's about like, if there could be matters. See, in our industry, in financial services, I always say, the line between ethical and unethical, the line between what is right and not right, the line between what is legally allowed and not allowed, that's very thin. And there could be like the issues of ethical dilemma where you may need wisdom of other people. Again, like Dharma of India, the concept is very unique relative to all the other religions because the Dharma is contextual. Every situation would be different at that point in time. And maybe the wisdom of some of these people coming from the background they come from, and maybe over a period of time there could be more members of looking at things from a different lens than just trying to interpret a best practice or a regulation in a highly mechanical or in a highly, I would say, from a legal lens of that, yeah.
Okay. Now, another question. As a, industry, head of an industry, how do you really create consensus amongst, now we are about 50 mutual funds. They're all kinds of sizes. Different plays in their growth trajectory, small and big. And obviously, not everyone's interests are really aligned, right? Like many at the bottom 25 may have very different goals and may want very different kind of guidelines compared to the top 10. And this has been a thorny issue at several levels. I'm not getting into the details, but how do you build that consensus and make sure that, the smaller ones are heard and you're able to sort of foster build some kind of a consensus, but that suits everyone, not just the big boys?
First of all, this whole debate on big boys and the smaller ones is not right. So we got set up in the year 2000. There were 26 AMCs on that day. So we were the smallest. And our license number was 44. So there were 43 AMCs before us. Somebody's became big, and the only asset manager that would become big who would have done well for their unit holders, who would have done well for all the stakeholders, and this is an open market for everyone. I think AMFI is a very unique example for any industry body, not only in India but in the world. The way all the 45 plus members, I think, come together and collaborate. During the day, we would compete very hard against each other on many counts. But at the same time, when it comes to the industry's interest, I think our interests are completely aligned. And just looking at your title was what? Truth, Transparency, and True North. So for us, I think we all believe that truth is the foundation, transparency is the path, and True North can be like your compass. And I think all of us agree on several things, that best practices are very important. We all agree the importance of financial literacy, the amazing work that has been done, I think, by all of us jointly, the amazing amount of work we all do together to coordinate, collaborate with the market regulator. Again, this is a very unique example. In most of the industries, they would always have a very conflicting or a very combative approach towards the regulator. In our case, it's always a co-creation between the regulator and us. And of course, that's how we deal with all the stakeholders, which includes our advisors, distributors, the other ecosystem partners like RTA, KRA, and all of that. And I think it's been like wonderful work done by people over the last 30 years.
Sure. Now, one thorny issue in the industry is this, launch of NFOs. I mean, lots of them. And this is something I think the regulators have also pointed out. Industry people also point out that, but still, there is a certain kind of incentive for AMCs to go ahead and launch NFOs, and many of them do it as a gathering strategy, not really focusing on whether it is a durable product, whether it will sort of stand the test of time, and so on. Where do you stand on this as an industry? What can you do about an issue like this?
So you reminded me of my investing days, and we used to say always that the 4 most dangerous words in investing are, this time is different. And I always say in our industry, in business, the 5 most dangerous words are, so the 4 most dangerous are, this time is different in investing. The 5 most dangerous, and this is a standard line I say in every my induction program, all the interaction with my people, everyone else is doing it. The 5 most dangerous words in our industry is everyone else is doing it. You shouldn't be doing something because everyone else is doing it. You shouldn't be doing an NFO because it's the easiest thing to sell. It should be something that your investment team has a conviction in. It should be something where you think that at least a segment of investors and a segment of partners have a space for it in their portfolio, and you have a capability to match that. And then, of course, all the other issues regarding the timing, the capacity of how much money you can take, the universe and all. The one good thing is over the years, and this is again credit to SEBI, that lots of guardrails have been put in place for the last couple of years. For example, I mean, if you do a sector thematic fund, then minimum 80% in that sector thematic, which again is like very, very well defined. You have a benchmark which has to be very, very close to the theme or the sector that you are doing, and SEBI does a lot of screening of that. At the same time, I think in a market which is evolving, markets are like so small in terms of overall size relative to the size of the market. We were like 4% of the market. Now we are getting almost close to the 10% of the market in terms of ownership of mutual funds of the overall market cap. I think there is space for innovation, but that innovation should not come at the cost of making products a lot more complex or products which are not good for the end investors.
Sure. Here, again, I want to ask you something that is very, very fundamental, that, at a certain level, almost all, I think, in the previous panel, except for Rajiv Thakkar, in a few AMCs where people take very effective, very strong, proactive cash calls, etc. It's taken as a given that, people have entrusted the fund manager with the money, we have a mandate and we will remain fully invested, etc. But for most part, most investors don't know what they are doing. They've just chosen the product because it's an HDFC or an SBI, etc. The onus of, making the investor aware or guiding is also rests with the fund manager. So how do you sort of respond to that? Because you're saying, hey, I have created like 26 products. It's up to you whether you want to invest in the defense fund or the EV fund or the large cap fund. But I'll remain invested. But like Steve Jobs says, the customer doesn't know what's right or what is...
Again, going back to the scriptures. So the two most important things are in Indian scriptures, the way they are written. One is like, and I think in the Mandukya Upanishad it comes, Satyam Eva Jayate, which is like the in Indian emblem. Just one second, let me complete this, the way it comes. So the meaning of that is the truth alone triumphs. Truth alone triumphs. Now, how do you get to that truth? The second concept is neti neti. Not this, not this, not this, neither this nor that. And you constantly work on that. So think about it. So let's say you say, my fund manager has done very well. Neti, neti. Neti, neti is, you're showing me last quarter, you're showing me last 1 year. Show me 3 year, 5 year, 10 year, 20 year since inception. Then it still says very good. Neti, neti. Compare with the benchmark. Neti, neti. Show me like how you have done it. Show me the portfolio. Show me the sector. Show me your turnover ratio. Show me this. And it just kind of like goes on and on and on till the time you come to that. Now I've shown all of that, and then you say, yes, fund managers really done very well. Whichever way, all the ratios I apply, Sharpie and whatever we disclose in fact sheet. Then you say, no, the fund manager manages 3 funds. What about the other 2? Is it that he's done or she's done very well in this? Show me the performance and all the parameters of that also. Neti, neti. And then that's how you get that Satyameva Jayate, that the truth alone triumphs. And all of that. And again, as I said, like dharma is very contextual and very individual to everyone. If an AMC, and you discussed that in the previous panel, if they think that given where the market is, given where the valuations are, they're comfortable with that cash, as long as investors understand that, as long as distributors understand that, and in their asset allocation overall, they're comfortable with that, they need to take that call. Somebody else may have a different view. But broadly, there are like so much of disclosure, and that's why I said that transparency is the path towards that, the ultimate truth.
On that note, thank you so much, Navneet.
Thank you.
Again, running short of time, but thanks so much.